Thanks, John. We'll return to your commentary in a minute.
Most viewers are aware that other comprehensive income is those revenues, expenses, gains, and losses under both GAAP and IFRS that are excluded from net income on the income statement. Earlier this year, FASB released an accounting standards update intended to increase the prominence of comprehensive income in financial statements and superseding some of the existing guidance in Topic 220 of the Accounting Standards Codification. Under current GAAP, companies had the option of presenting comprehensive income in the statement of changes in equity. That has been eliminated. Under the new accounting standards update, items of comprehensive income must be presented in either 1, a single continuous statement of comprehensive income, including net income and other comprehensive income, or 2, two separate but continuous statements of net income and comprehensive income.
The objective of financial reporting, at least in terms of the current conceptual framework, is providing information that is useful to users in making investment and credit as well as resource allocation decisions. Now, when I took an accounting course in college, the professor told us that financial reporting was a form of stewardship, requiring management to provide an account of their performance over a given period and to show how they have utilized the entity's resources. So, John, let me ask you, to what extent are, or to what extent should accountants be interested in the stewardship of assets?
Mike, I think it's a theory that certainly works well in any discussions one may have about accounting issues or accounting outcomes. I think in practice, though, particularly for larger companies, the real issue has little to do with stewardship, has a lot to do with the performance metric, generating performance outcomes that may either drive the stock price, that may allow the company to comply with existing covenants or agreements, whatever it may be. I think the issue of stewardship is far in the background for many accountants who are in industry. I think they've grown up professionally, many of them, worrying about internal control, worrying about tax implications of decisions, worried about what impact will this circumstance have on earnings per share, on the stock price. So I think it's an admirable topic to discuss stewardship. I believe that it really hasn't gotten much of really anybody's attention in recent years because the perception is there are other things that are of a greater priority. You may also look at it this way. Stewardship is really a long-term perspective on what may be happening to a company. And what we've seen in recent years is many managers within organizations are much more focused on the short-term outcomes. I'm not debating the merits of either. I'm simply making the point that if you focus more on short-term outcomes, you'll be less focused on issues associated with stewardship.